Day 41 in Project 100. Welcome, everybody. It's my journey to my first 100K with day trading and sharing the journey here with you guys. Here on YouTube, it's more of the mental side, sharing my key developments and my thinking patterns. And also, I'm also going to be sharing with you guys how I develop my behavioral patterns, how I change my execution, and more specifically, why and who told me or what was the exposure that I got to change to that specific behavior. So maybe if you're in the same struggle, maybe it can help you with some mindset frames to develop that into your own trading career. Today, I prepared some key thoughts that I incorporated from the book, The Daily Trading Coach by, his name is Jared B. Steenberger. I'm pretty sure it's Steenberger, but I'm not quite sure about the first name. But The Daily Trading Coach is essentially a book. It's like a handbook telling you in 101 lessons what are some key developments for your own self to be able to coach yourself on a neutral and rational basis. Goes very deep into the psychology, but also operationally gives you good tips on what things to develop to change your execution. As the book started, it was quite boring, to be honest. I didn't like the way he phrased things. It was hard to understand a couple of things, very lethargic. The more it progressed, the more I got into the later part, like into after 25% of the book or of the lessons of the book. I developed an interest towards the book. A lot of things that he shared, I could feel that he was sharing it from a point from successful traders, just because it resonated with a lot of patterns I've seen with other successful traders. They have been using that same terminology, that same mindset frames, but he put it in the book in better words that I want to be sharing with you guys. Today, since the last 3 days reading the book, I've been reading it for a couple of weeks now, but the last 3 days I didn't update you guys specifically on what I've been learning. And yesterday, or I think 2 days ago, it was 2 days ago, I read a chapter while also simultaneously listening to it. I can, by the way, advise that to everybody. If you have struggled focusing in reading a book, just read it and listen to it simultaneously. For the people like me with ADHD, it's easier to focus your senses if you are surrounded by all your senses, not just by one. Because for me, I tend to distract my mind very easily if I just focus on either listening or reading. When I listen, I came up to other ideas, and when I'm reading, I distract myself also with other ideas actually, and then I don't focus on the idea at hand. So this helped me kind of like quiet my ADHD mind more and focus specifically on what is being said and going deeper into that. So I've been doing that for a week now, reading the book since 2-3 weeks now. And since I've been doing that, I've been seeing I enjoy it way more. And also the lessons that I'm getting from the book are way more deeper. I can like draw back to those elements quicker, not just from the reading part, but also from the listening part. So 2 days ago, I read lesson 32, which is recognize your patterns. And I wanted to share with you guys today my losing patterns. So what patterns am I using that a lot of losing traders do that tend to be destructive for your own development as a trader, but also for the development of your bankroll and your account size. So one key frame that he mentioned before going into that, he said you cannot change your personality or how you react to things, or you cannot change that you react to things. You can only change, but you can change how it's expressed. So you can not change what you feel, but you can express how you feel it or how you express the feeling. So you can be stressed and you can on one thing, and this is kind of like constant, but you can change how you express it, how you react towards this thing. This is also a stoic frame. The only thing you can control is how you react towards things. This is more in the simple language, but this is also reaffirming in that case. So just keep taking an example. If you're stressed, you can choose to express that stress by going to the gym, but you can also express that by eating sugar or I don't know, doing something like lower dopamine or quicker dopamine rather than longer rewarding one. Both are reducing stress simultaneously, but either one of those are expressed in completely different types of ways. Another example, you could say you're fearful or you're scared. One is you stay scared and you cry on the bed sheet and you cry, or you get up and you try to face and get the information close by because you're only feared from the information that you cannot see. Um, you're feared of the plane crashing because you don't know how it feels like. But if you are in the moment, you probably are not feared. You are frightened, but that's a completely different emotion. Fear is the emotion before frightening, before distress inside the moment. So fear is purely psychological. So you can change that by changing how you react towards things. Because if you change how you react towards a thing, you're the opposite of fearful, which is brave. So if you might feel the same thing, you might internally have the same feeling, but you're still feared, but you still will step into the cage and fight your opponent. So everybody that watches a little bit of MMA, every MMA fighter that is high level, everybody says it's constant. It's the most normal thing to be fearful. It's how you choose to react towards the fear. It's how you express it, the feeling. So that was something that really resonated with me in that moment. And then he got a little bit more operational. So for the people that are not trading, this is in trading, you're essentially analyzing not only yourself, but you analyze also your trading. Both are happening simultaneously because you as a trader are the direct representation of you as a trader, or you're trading what you trade and how you trade. So he said here, which I really liked, is when you analyze yourself, divide your reviews for the most successful trades, solution patterns, and the worst trades, problem patterns. The distinction between those might already point you to a direction, which I really loved. He said that. I took this as a note. Essentially, in trades, you take a trade, there are trades that are successful and trades that are not successful. And what you can do is you can just look at the good versus bad. And just by looking at good versus bad, you can see something is different between those. And this already points you to the direction of the thing you need to change. So for me, one thing that I realized with a lot of the trades is volume. Volume is one of the key indicators for me that I saw being different in both of my success storm and my losing trades. So I realized how I can read the volume. And this happens through repetition of pattern. It's not I can go into a forum or ChatGPT and read what is good volume, but it's more I either listen to somebody that is super successful how to read the volume, and he is giving me a clear step-by-step instruction how to read it for specific situations, or I can build pattern over time by myself. The latter one, it takes more time or more effort. The first part probably just takes an investment for you outside to invest into somebody for this information. Both are leading to the goal. So essentially, you're able to distinguish between what is good and what is bad. What is the main differences? Let me just do more of the good and less of the bad. So the key elements that he also mentions that I also knew before that, or I realized, are sizing. So how different do you size for your trades? Wasn't really affecting me because my sizing is not discretionary. It's unique. It's fixed as long as I am not feeling there is an edge in specific patterns. But definitely one part of winning a lot and making a lot means you know what your good trades are and what your bad trades are. Your bad trades or worse setups you size lower, and your good setups, high conviction, you size higher, so they play out more and the other ones play out less. This is all a little more nuanced. It doesn't really help you from going from losing to break even or winning. This is just basically squishing out a little bit more percentages of your winners and losers. Another one is numbers of trades. So how many trades did you take in total in one day? Does this change somehow your results? So if I take a trade and there are 4 trades in one day and it's losing, probably means that the more trades I take, they tend to be losing trades and false signals. And the other one is your emotional state. So look at the trades and track during the trades, how did I feel here? How did I feel here? Here I felt energized, here I felt sleepy. Here I felt fearful and greedy or unsure, and here I felt certain and disciplined and patient. Those are things that you have to define for yourself. Okay, this feeling right now, what my internal state means this, so you can also pinpoint exactly what it is. It's very subjective, but this is also the self-analysis coming from trading. And he mentions again, the key is to look for patterns. Your trading strengths can be found in the patterns that repeat across successful trades. Many times traders fail to make changes because they aren't clear on what to change. They rely on vague generalizations. I need to be more disciplined. This I fucking love when he said that. Sorry, my language. But he said, I need to be more disciplined rather than identifying specific behaviors to work on. Everybody that knows me, I love Alex Hormozi. He also talks about that. Vague terms, like vague generalizations, like I need to be more disciplined, more patient. What does this even mean? It's very vague. It's very inspecific. So when you see yourself in that moment, you might think, I am not patient, but it might be a completely different problem. So the more specific you are, the more clear you can actually see the picture and be able to identify the real cause, not just what you think is the cause. And then he goes into types of patterns, which I also really like. There are emotional patterns, is how you feel before and during trades, track those. Behavioral patterns, how you prepare and manage before you trade. So what do you do 30 minutes before taking the trade? What do you do 1 hour, 2 hours, 4 hours? It's quite micromanaged in that case, but you can see what do you do before entering the trade or like as preparation to the trade. Cognitive patterns, the thought process and concentration level. So are you sleepy? Are you like watching something on the side? Are you ready to go to bed? Your girlfriend is next to you and she's distracting you. You have to see how is your mental state, how in sync are you with the market in that case. The physical patterns, like generally your energy level, like this is probably like how drowsy are your eyes, are they hurting, do you maybe feel headache? Those things can be definitely factors or patterns that over thousands of trades can clearly show you when you have headache, tend to perform worse than when you have no headache. Or maybe there is no difference at all, but there might be something for you that is a common pattern that if you just get rid of that, you don't have a problem anymore, or you improve you as a trader. And then you also have trading patterns, which is more on the technical side, which I so far have been worked on the most, which is how much size am I using? What time of the day? For me, for instance, I realize my Monday trades are awful. I'm extremely in loss with Monday trades. And I realized this Monday, 2 days ago, or 3 days ago, I took a trade, which was also went into loss. And then I realized, wait a second, my Mondays are shit. Why did I take this trade? I shouldn't take this trade. I should just let the range form as it forms. And then I'm going to make my plan on Tuesday, Wednesday, and Thursday, and Friday. Or Sunday as well. Sunday is also profitable for me, which a lot of people don't trade, but for me it works. So I just have to use that pattern. Then also mode or enter exit. So why did you enter? Why did you exit? Check that. Instruments, like what instruments did you use? What indicators did you use? And things like that. Hope that makes sense. Let's get a little bit more into detail now into what specific losing patterns I realized in myself. Maybe we can talk about them briefly. Maybe you see yourself and what I think I should change them or what I should do or what I believe around them. So the first one is placing trades impulsively after losers. I realized that that's definitely the case for me. 2 days ago, I had 3 days in a row, all were losers. All. I think one I cut out a little bit lower loss. It would have been a full loss, but I cut it out in half loss, which is cool. But I realized I had 3 short setups. The one didn't work. Wait a second, I can take the second one. Maybe this one's going to work. So maybe we don't reverse here, but maybe a little bit higher. So my setup still made sense. Technically wise, I don't know why they didn't work, but I realized I took one trade and my thought pattern was, okay, I'm gonna go take another trade. So this was because I lost a trade, I am going to look out for another trade, which is my definition on impulsive. You act based on the impulse, rather than the trade happened, you log out everything, base zero again. And now you're like, okay, what is the market now? Did anything change? What is the new information standpoint? Let's reassess the market and let's take trades. And not, oh, the one short failed, let's take the other one. So that's something I realized for myself, that I impulsively trading. I don't know if this is a bad thing. It might be a bad thing if it clouds you to analyze the market as a bridge between the trade happened, it was a loss, I want to go to the next one, and in between that point, you're not clear about what's going on in the market. You're clouded because your anchor is your losing trade, not the market, which is a key frame. So it might be bad, but for that, I'm not quite sure. I don't have enough data on that. If impulsivity in itself is a bad thing, so I had a losing trade, I'm not allowed to take another one. I don't think that rule makes a lot of sense, because if the market clearly tell you should short and you have a setup, you should probably take it if over time you've seen that this setup is profitable. But maybe the losing trades is clouding you so much that you're not able to gauge the market condition you're currently in, because the information could have changed from the moment you analyzed it. That's just something, food for thought for you. The next one is ignoring stop loss levels. Stop loss levels. That's kind of like both stop loss levels, to avoid losing. This I used to be, I'm not anymore, because my stop loss has been way more defined now what I have to do. But I remember one trade where I had, I think, an account size of 1.5K back in that time. And what I did, it was an XRP short. And it was just going up. And I was like, it came up into my area of interest where I said, okay, I'm going to short it here. It makes a lot of sense. The market is completely overheated. Bitcoin is also at a normal reversal zone. But I didn't realize that both the 1 hour, 4 hour, 30-minute, and also the daily were bullish, but I was shorting it. So I was going against the market, which was back then type of what I was doing with my trading strategy. It was a trend reversal. So you have a trend, I'm going to reverse that trend, and you try to catch the bottom essentially, or the top for the short side. And I took the trade, and I remember it was at 2% loss already, and 2% risk of my total account, 1.5. So it was kind of like $30 in loss. And then I was like, but wait, no, Bitcoin is at resistance. It will come back, right? So what I did is I scaled higher to reach up my entry price a little bit higher, and it kept going up. It just kept going up. And then it went to minus $50, which was back then 4%. That was a lot for me. And then it went to minus $75. I still scaled. And then it just gave a really crazy spike and liquidated me for, I think, minus 300 or something, or 250, 300, something like that. And then what it did, this liquidation wick was the point where I exited, and it was essentially the exact top I sold, a little bit spike above, and then it reverted back all the way down. So I was the exit liquidity for the real short, and I sold a huge amount in terms of proportion to the capital. So I realized I married myself to the idea that, okay, it is going to revert. I said, I will force the market now to go against, or to go with my will. So I said, I'm more powerful than the market in that case. I will change the direction of XRP, which is a multi-billion-dollar asset. But I didn't realize that it didn't work. And I was so convinced that it's going to revert that I ignored all my stop loss levels. I canceled them. I said, I'm going to ride it out. It makes sense to hold it. And then it just gave an extremely weak to the upside, which was the highest point, and then it fell down. So I ignored stop loss levels because I didn't want to have a loser. I had some winners before that. I was like, no, I'm a winner now. I have a high win rate. Let me just keep that win rate going, and then I didn't realize that I lost a lot of money in that way. So that was my second point, that I realized that's definitely, or that used to be me. Maybe some parts, I think this is more of a beginner mistakes, to be honest. A lot of intermediate or winners don't usually deal with that, since it's like, if you have your stop loss invalidations, that's quite normal to hold them or to be fixed with them. The more progress you become, the more understanding you get about the market and the feel about the market, the more you can like dislike those patterns. But as of right now, I'm definitely not going to do that, because I paid my tuition fee for that. And the third one that I'm feeling I'm definitely inside is becoming caught up in PA rather than planning. Rather than planning next trades. Yeah, so this is also something I realized, that I took a trade and I'm looking at the trade and how it proceeds, and I want to see if I can manage it, although the time that should have passed to do something didn't pass it. I'm just so attached to the outcome that I wanted to revert or to go to the direction that I wanted to go, that I look at the screen until something happens, and thinking that I can change something by just looking at it. It's a very childish behavior, but it's definitely something I used to be definitely a big part of. Nowadays, I realized, oh, wait a second, I'm way too attached on the outcome. Let me just like get out of that and let's go like look at the rest of the market, what's going on. I'm going to act on my trade management rules based on candle closers. I don't change anything based on like within the price action. I let the price play out until the candle closure happens, and then I make my decision. So yeah, that's definitely something a lot of people are in. The fourth one, taking trades for excitement. Yeah. This is something I realized for myself, that every time I'm not in a trade, like currently in this moment, I'm not in a trade, nothing, I feel FOMO. I feel like, oh my God, I'm not making money. Like, what's going on? I'm not making any progress. I'm making videos here for no reason. I should be trading. And this is the part where the distinction happens between impatient and patient people. Patient people just find out something to do in the meantime without doing the thing that they should be doing, or that they shouldn't be doing, which is trading impatiently. I marked up my levels, I set alerts, something happens, I'm gonna get an alert here. Up until that point, I don't even think about taking trades. If I go into TradingView now, maybe I'm gonna force something just because I think, it looks fine. I think the market will do what I think it will do. And then you don't trade within your rules, you trade outside your rules, but you reason them like, yeah, it was part of my rules, but it's actually not. So just as a help for that, I realized that for myself as a big portion is if I don't take trades, like I feel like I'm missing out. If I take a trade, I feel the acceleration. I feel like dopamine is coming out. Oh my God, something is happening. I could win money, I could lose money. It's the gambling mindset. Which is ultimately losing, because everybody incorporates that mindset. So you have to establish a condition that sets you into the environment where you don't behave like this gambling monkey, but you set alerts. And every time my clock here clocks on a full hour, I go into the market and see with the trades that I'm currently having, should I make any differences? This just gives me plenty of time in between to just do whatever I want. Look at the market outside the things I'm trading and see, maybe there are some opportunities here. Where should I take profit? What are some good ideas on here? But I don't look at the thing I'm actively managing, because this is going to get me into the emotional side, not on the rational side. I hope that all makes sense. These are just some 4 key things that I realized he has plenty of here. I think it's 2, 4, 6, 8, 10, 12 other patterns that he realized with traders, losing traders, but those are the most prevalent that I realized myself in the past, and those 3 definitely in the present as well. And yeah, hopefully this kind of like helps you in what you are going through. Perhaps maybe it sheds some light in the perspective that, hey, somebody is going through the exact same thing. Maybe it's normal to feel like that. and not be ashamed of me being impatient, but realize everybody is impatient and everybody has a way of coping with it. Maybe you go to the gym, maybe you go to the swimming, maybe you hang out with people, but you should find out something to do besides that and find an environment you can set for yourself so you reinforce the pattern of patience and not of impatience. So don't just go into your laptop and reactively look for trades. Go into the laptop, look for potential mark sets, and then set alerts. And when the price comes there, you reassess the situation. Okay, the price is coming here. Breathe, not enter the position immediately because you analyzed it beforehand. No, you reanalyze it. Okay, is everything still set? Is the rules, like I'm going to my rule book and it says, okay, the price doing this is still fine. I can still enter the idea that I had, or maybe change the information you shouldn't based on patterns. So that's definitely something I came up with. And yeah, based on my current trading, since the last time we guys talked, I think that the day was day 37. So it's been 4 days since that. I did actually lose, I think it was a total of minus $68, which is 4 trades in a row lost. I actually had one trade, which is the H bar, or no, there was the Bitcoin Cash, I remember, which went up to a plus 2.84% or 2.4 R trade. I didn't take any profits on that because my full TP was at 3.5 risk reward. So since then, I didn't have any winning trades. I realized that I had 3 setups yesterday, 2 days ago. 3 shorts. I took all of them stop loss. So maybe if one stop loss doesn't work, wait out until the market resets and gives you a clear environment. So if the trend clearly shows you, okay, I just blew out your short, I don't care about your short, and it's not an outlier and every coin is doing that, probably try to look for coins that are potentially going to give you a long idea, not a short one. So this is fighting the trend intraday. I always thought this is like over longer time horizons, like daily, like currently we're in the bull market over 2-year span. This is trend, but maybe within the day trend, we're short. So it makes sense to short and you should take the short. So if the price is clearly showing you I'm going up, probably don't look for shorts. If you already got a blown out short, maybe try to look for longs instead. So reassess the situations based on new data, and the data point could be, I'm blowing out your shorts. I don't care about your short levels. Your long levels are going to be more profitable. So maybe I should have not taken the other 2 shorts and should have seen how does the first short react. There is no reaction of the short level. The levels are not respected. Okay, let me go into other coins that are perhaps at long reversal positions and look for them instead. So that's something analyzed. So intraday, trend, reactive response. So look within the day, how does the price react at the levels you said or should behave a specific way? If they do not behave a specific way, your hypothesis about the market is wrong, you should reassess. Completely scratch out everything you've done so far, reassess what is the new market condition. Are we breaking structure here? Is there any news out there that might be behaving that? Are there any news coming up? What is the sentiment going on? Going to Twitter, are people bullish? Maybe look for shorts. The people way too bearish, maybe look for longs. Just as a side note to that. Yeah, so that's my current trading. I'm gonna be taking more trades as the time progresses. I already have, I think, 5 trades for Karusha case start. So for the first day, he wants my last 5 trades. Since I joined the mentorship, I was more precise on how I take trades. I wanted to take a lot of good trades. That's why for the first 3 days, I didn't have a lot of trades. I had 2 trades with both ran amazing, one full TP and the other one was break even. And since then I had losers. And I was like, actually, it's not bad that I have losers because it's way better for me to work on my losing side rather than the winning side. I could maximize my winners, but it's way more productive to look at your losers. How can I minimize them or maybe even get rid of them? So I'm actually, from the mental side, I'm feeling very well about my losers. So I'm very optimistic despite having a string of losers right now. And maybe this is like a dislocation or like a disconnect from my emotional patterns, which are, if I win, I feel good. If I lose, I feel bad. And maybe switching that by, if I lose, I feel good, I feel optimistic. Oh my God, I can make progress. I can make the newbie gains. I can learn from my mistakes. And when I win, I can be like, oh, maybe I should be careful here. Maybe I'm stepping too much into my ego side. I shouldn't be taking trades because I'm confident. I should be taking trades because the strategy tells me to take trades. Hope that all makes sense. It was a lot of information packed, but this is kind of like how my brain operates the last few days, probably since I was born. But yeah, if you guys learned something from that, hope it's really going good for your trading career, both monetarily wise, but also fulfillment wise. Hope you're getting fulfillment from this approach, because if it's not positively reinforcing, why the hell are you doing that? There are way better ways with also leverage to do things like that. So you also have to find some enjoyment in that, find some patterns, some feedback loops that are rewarding your sense of I'm making progress. Yeah, crush it.